Hello and welcome. You're watching special coverage on Budget 21-22. I have a very special guest with me now, Mr. Vetri Subramaniam, Group President and Head Equity UTI Asset Management Company. Very good evening, sir, and welcome to the show.
Oh, great to be here. Thank you, Geeta.
How would you see this budget? I mean, has it met your expectations?
It certainly has, Gitu. I think we are dealing with an uncertain situation as of today. And what does the economy crave when there is uncertainty? It essentially craves for two things. One is some kind of stability. And second, that government as sort of the sovereign step forward in terms of being able to borrow and also show a clear inclination to spend. When you look at these two factors, I think the very fact that the government did not really make any significant changes to the tax code actually delivers on what investors and entrepreneurs crave for, which is tax stability. And secondly, as I said, on the fiscal deficit front, by ramping up or rather holding the fiscal deficit much higher than what people were actually expecting, they've clearly indicated a policy choice in favor of growth over fiscal prudence. And I do believe these are the two things that we were all looking out for, and therefore certainly very, very satisfied on that front.
So will you be worried about the fiscal deficit target set, because that is really going to impact the ratings for the country as its sovereign ratings? So would you be really worried about it?
Good question. We're all prisoners of the past, so we're all used to looking at our past fiscal deficit numbers, and then we're thinking, we were talking about a glide path to 3%, and oh my God, it's now at 6.8. I think what we have to remember is that the whole world's trajectory of fiscal deficit has changed. You've got the US talking about a $2 trillion stimulus again, in addition to everything that they did last year, which is another 10% by way of a stimulus. And you've actually got talk that it might eventually go up all the way to 4 trillion, which is 20% of GDP. So I think what we have to remember when we think about the 6.8%, of course, that's in addition to 9.5% in 2021, is that this is the trend across the world. We're not doing anything extraordinary. We are having to do our bit to help the economy. It might look like a very high number relative to our trajectory, but it is not an exceptional number relative to what countries across the world are doing. So, I'd be reasonably comfortable. I'd also say one more thing. I think, the government has really signaled its intent to support via this fiscal. And then beyond that, they can continue to use tactical choices or make tactical changes if they find that a course correction is warranted. Just like if they had stayed on autopilot with last year's budget numbers, you'd never have seen a 9.5% deficit, but they had to change course. So I think flexibility is an inbuilt element of the policy toolkit when you're dealing with uncertainty.
Huge borrowing in the offing, and as we saw today, the yields started surging. So lots of work for RBI to do actually. So how do you see this going?
Again, Gitu, the point that I would make is keep 2-3 things in mind. There's actually been a huge surge in domestic savings. And that itself will keep the cost of money low, because I think it will take a while for the bank's risk appetite to come back. Secondly, remember that the dollar is weak. There are strong capital flows, out of the US. And in fact, India is sitting on record foreign exchange reserves, and there's still a surge of capital coming in. So when you look at this changed context, I don't think financing the fiscal deficit is so big an issue. Also, this large borrowing program, to the extent that a lot of the incremental money, remember about 30% increase in government capex, it actually has a positive multiplier on growth, income, and eventually taxes. So I would not be too worried, given the fact that the underlying savings trajectory is higher and capital inflows are also higher.
If we talk about some of the good measures that have been announced, is insurance FDI limits being hiked to 74%, and then we have disinvestment plan, quite a bit of a bold outlay of the plan this time. Let's talk first about the disinvestment part. So target of 175,000 lakh crores, toned down a bit this year. Privatization of 2 PSU banks, one general insurance company, How possible is this? Because last time we saw disinvestments missed by a lot. I mean, they are expecting around 40,000 to 50,000 crores this financial year, but it's a huge miss. So, how possible is this?
Sure. So again, Gitu, I think you're bang on target over there. We've been long on intent and divestment targets in the budget, but we've always been short in terms of execution. The only point that I would make is, remember, this time around, first of all, what I'm delighted by, actually going back to, in fact, last year, is that now the government is no longer talking disinvestment. They are actually talking privatization. And once again in this budget, the FM reaffirmed that what we are looking is that what are the strategic areas, how many companies that the government needs to have in those areas, what are the non-strategic areas where government does not need to have companies. I think this is a fantastic framework to think about, also because there isn't really much left to divest unless you're willing to go below 51%. But this is a great step ahead because now the framework has shifted from divestment to privatization. So that's point number one. But you're absolutely right. Execution is the name of the game. I'm hoping that last year's setback was essentially COVID related, and given the government's strong political commitment this time around to privatization, I am far more optimistic that something good will come out of it in the current year, but fingers crossed.
Markets celebrated today. Sensex Nifty gained over 4%. What do you expect in the markets now? FII flows are buoyant. Do you expect those to continue? And which are the sectors that you will be quite bullish on now?
Gitu, 25 years in the market is virtually impossible to predict which way FII flows will go. I love it when I hear people talk with certainty about what will happen to FPI flows. My experience in 28 years, we have no clue how the wind blows and why it changes. So, I'm not focused so much on that. But in general, I would say capital flows to emerging markets will stay positive, given the fact that now the US dollar itself is weak, both because monetary policy of the Fed is very, very expansive and their fiscal itself is surging. So I think that context will continue to remain quite supportive from an India point of view. I think as far as the market's reaction today, as you asked, is concerned, very simple. No new tax is great news. Stability of tax regime is boring, but boring is fantastic, So, unfortunately, the stock market, I've always found the initial day's reaction to the budget is literally a function of what do investors think is happening to their wallet. Is money going out or is money coming in? We went in this budget which people worried about, government is going to go super rich tax, capital gains, etc., etc. Nothing happened, and that was great news. And of course, the fact that the fisc is supportive also gives the economy some comfort. But literally, I think it's a question of no new taxes equals good news.
One sector that you're bullish on the most?
Sure. So I think just given the fact that government has now indicated or played its cards on the table saying that I am going to support growth at this point of time, one would have to be largely positive on the domestic cyclical areas, and this ranges from everything to banks and financial institutions to capital goods companies, maybe even some of the consumer discretionary companies, because with the time lag, they would also benefit from an upturn in the domestic economy. Some of the companies which cater to large-scale construction, so on and so forth. So I would say pretty much a wide range of domestic cyclicals is where we would be positive. Incrementally, there's nothing new in this budget to make one positive about, let's say, some of the most structural stories and, let's say, IT or consumer staples. Great bottom-up companies there, but the budget really doesn't, add some fuel to the positivity there. So I'd say domestic cyclicals, and it's the structural stories which sort of, take a little bit of a backseat at this point of time.
Thank you, Mr. Subramaniam, for being with us. It was a pleasure speaking to you.